you're going to have a deurbanization of Europe and of many other countries, and a move back to the land of self-sufficiency. Essentially, you're having a retrogression towards a medieval subsistence-type economy throughout most of the Western world. That, again, is the neoliberal model. Once you strip all of the capital away, once you strip the money away, once you impose debt peonage on an economy, you're left with a feudal-type subsistence economy. That's our future, as current trends are going, until voters push back in another direction.
I'm Bonnie Faulkner. Today on Guns and Butter, Dr. Michael Hudson. Today's show, The Way We Were and What We Are Becoming. Dr. Hudson is a financial economist and historian. He is president of the Institute for the Study of Long-Term Economic Trend, a Wall Street financial analyst and distinguished research professor of economics at the University of Missouri, Kansas City. His 1972 book, Super Imperialism, The Economic Strategy of American Empire, is a critique of how the United States exploited foreign economies through the IMF and World Bank. He is also author of The Myth of Aid and Global Fracture, The New International Economic Order. Dr. Hudson has written several recent articles on the global financial crisis, including Orwellian Doublethink, Nationalize the Banks, The Language of Deception, Finance Capitalism Hits a Wall, The Oligarch's Escape Plan at the Treasury's Expense, and Bubble Economy 2.0, The Financial Recovery Plan from Hell. Recovery for whom? The answer, for the people who designed the program and their constituency. Dr. Michael Hudson, welcome.
Thank you very much, Bonnie.
Today's newspaper announced that AIG is to get a $30 billion boost amid a huge loss of $62 billion, and that this latest bailout of insurance giant AIG is the fourth, after $60 billion, $40 billion, and $50 billion, totaling $180 billion to date. The stock market, the last time I looked, reacted by dropping 240 points to well below the Dow 7,000 level. What is your assessment of what is going on?
Well, last week they said that in addition to the $150 billion that AIG already owed, the amount that the government was going to have to lend would be $100 billion, not merely this 20. So the plan is apparently to dole out more and more money in small doses, each time saying they're surprised by the downturn in the market, shocked by the fact that they need yet more of a bailout, and they're being thoroughly dishonest with the population and pretending that this last little bit will stabilize. The intention is to give $50 billion here, $50 billion there. Let me give you an example of how serious this is. So far, the government has given $6 trillion to the financial sector, in addition to taking over $5.2 trillion of Fannie Mae and Freddie Mac bad debt. That means that the government debt has gone up by $11 trillion. Now, today, Warren Buffett came and said, in order to restabilize the economy, you need the Treasury interest rates to go back to their historical norm of about 5%. At 5% of $11 trillion is $500 billion a year in taxes just to pay the interest on the money that has gone to bail out the upper 1% of the population. Now, this money that's going to AIG, $250 billion, $250 billion, is only to pay the wealthiest 1% of the population and the European speculators. They're saying that this is to bail out the economy and to prevent an economy-wide breakdown. But it's not to bail out the economy. The money going to AIG is not for its insurance operations, not for its banking operations, but entirely for its mathematized swap models of guaranteed computer-driven swaps that essentially are gambling by wealthy people who invest in hedge funds. Now, as I think we've discussed before, in order to invest in a hedge fund, in order to buy the shares or to be a partner in them, you have to sign a document with the Securities and Exchange Commission saying that you have over $1 million to lose, and you can lose all your money, and it won't affect your living at all. So this bailout money is going entirely to people who don't need the money, not to the economy. Similarly with Citibank's bailout, all the $25 billion here, $40 billion there, and it's going up to $100 billion. This money is for Citibank's off-balance sheet operations, having nothing to do at all with its banking operations. So the administration is being dishonest with the people, and the press, the financial press, is maintaining the dishonesty, just reprinting the handouts that the Treasury gives it, pretending the big lie. And the big lie is that if you don't give money to the top 1% of the population, the bottom 99% won't get by and will collapse. And this is not the economy they're bailing out. They are imposing on the economy such heavy debt charges, such heavy taxes, that living standards over the next 10 years will have to fall by at least 15%.
Well, because the stock market is dropping, it looks like even Wall Street is beginning to wonder about this.
Most financial investors anticipate that the bailout won't work. When you see the stock market dropping, and since we've spoken, it's now down 266 points, it's plunging even more, this means that it's not a surprise to the financial investors that the bailout is not working. They are telling the government, bail us out. They're using the money to pay themselves salaries, to continue to pay bonuses, to pay guarantees, and simply to take their money out while they're pretending that all this is stabilizing the economy. They know it's not, and it's pure theft. And the Obama administration, the Secretary of the Treasury, the people who Mr. Obama has left policy in charge of are witting parties to the theft. I'll give you an example. Over this last weekend, there was a meeting of the Eastern Economic Association here in New York. And it was reported that of the money that AIG owed to the counterparties, the single largest counterparty was Mr. Paulson's own company of Goldman Sachs, $20 billion. So the Treasury Secretary, in bailing out AIG, has made his company the major single bailout. The President, Geithner, and the Treasury are continuing to bail out the same people they were bailing out under Bush. So essentially there's been no change in economic policy between the Obama administration and the Bush administration. The money's still going to Mr. Paulson's company and his cronies in what over the weekend I think Tom Ferguson called it the neoliberal patronage machine.
Now, you just mentioned a few minutes ago that these huge debts that are being run up by the government to so-called bailout people, that these are going to have to be paid for by taxes. Now, where are the taxes going to come from?
They're not going to come from Wall Street because in the tax rewrite that was done at the time of the bailouts of the financial sector last year, the financial sectors who are buying the insolvent banks get to charge off the entire purchase price as an expense off their tax returns. So last October, the government essentially made the financial sector tax exempt, just as the real estate sector is essentially income tax exempt. So the only place to extract the income from the economy is going to be from labor and industry. That's one of the reasons why living standards are going to go down much more sharply than people believe. I'm not talking about 1% or 5%. We're talking 10 to 15% fairly quickly.
So then you're saying that the bailout of the banks is not going to solve this financial crisis?
No, it's just the opposite. It is causing a much greater economic crisis by now having to levy the taxes to pay for the giveaway to the financial sector and essentially the richest 1% of the population.
Well, do you have any opinion as to how much longer Obama and his economic team are going to keep up with the present plans?
Until they're thrown out of office. Until Mr. Obama decides he doesn't want to have his presidency go down as Bush 3, or even worse, as Clinton 5. and he dumps them. Until he dumps them, the country is going to be radicalized in ways that people are not even anticipating now. And that's basically Newton's third law of motion applied to politics. Every action has an equal and opposite reaction. When you impoverish people and give to the wealthy people, when they realize that what they told was change is going to be change working against their interest, not for their interest, there's going to be a change in the political alignment here in ways that nobody can tell.
Are we now in a deflation? And what is a debt deflation as opposed to a price deflation?
They tend to go together. A debt deflation is when more and more of people's income and corporate income have to be paid for debt service, leaving less and less available for spending on goods and services. For instance, for many years, people were using their homes, the metaphor went, as a piggy bank, meaning that they were borrowing against the rising inflated value of their homes to keep maintaining their living standards. And this was supporting the price of the goods and services they bought. Now, all of a sudden, they're having to pay, let's say, 20% of their income for debt service. That means that in the past, they were borrowing money over and above their income to buy goods and services. Now, instead, they're having to spend their income to pay debts. That means they're not going to have enough money to eat out in restaurants. Walmart stocks are one of the few stocks that were up today because people are not going to the expensive stores. They're going to the cheap stores. In my neighborhood in Queens, when we walk down the street, we see restaurants closing. We see for rent signs on stores that were rented out. We're seeing an emptying out that is being repeated in malls across the United States when stores are going out of business because people are buying less and less.
So that was a description then of debt deflation. That's what's meant by that.
And price deflation is when people have to lower their prices in order to sell more. Restaurants are now lowering the prices. Clothing companies are lowering the prices. There are sales all over the place. Last Friday in New York, there was almost a riot at a store where bridal wedding gowns were marked down from $10,000 to about $1,000. So when people have less money to spend, prices come down.
You have said that the economy consists of two sectors: the balance sheet or fire sector, finance, insurance, and real estate, and the real economy, the production of goods and services. How is deflation affecting each of these sectors?
Well, price deflation occurs when income is diverted away from buying the products that labor actually produces to paying the banks, paying the insurance companies, and paying property interest. Basically, students of economics for a century have been taught Say's law, and Say's law is that production creates its own demand. The idea is that when an employer is going to hire labor, it pays wages, and the employees then spend these wages buying the goods and services they produce, and that's supposed to be the circular flow. And the circular flow is between production and consumption. What this circular flow between industry and consumer leaves out is the fact that wrapped around this productive economy, wrapped around the factories and industry and agriculture and transportation, is the financial sector lending money and credit. And the money isn't simply used to oil the wheels of commerce. It's really like a drain to drain out income from this. And as people go more and more into debt, that means that the circular flow is no longer intact between consumers and producers. It means that the consumers have to pay more and more of their income to pay their mortgage debt, to pay their student loans, to pay their bank debt and car debt. And as they pay off this debt, they don't have enough money to buy what they produce. And so the producers cut back their employment because there's no market for what they produce, and the economy shrinks. And that's what's happening today. Shrinkage economy because the circular flow is being interrupted by the financial and fire sector interjecting itself into the circular flow and draining it.
Yes, I think you've described that financial sector, the fire sector, as parasitic on the real economy.
That's right. And there are two elements of parasitism. What everybody thinks of parasitism is simply a free rider, like a leech, taking out blood, taking out the nourishment and draining it. But biologists know that this is much more complicated than economists usually describe the metaphor, because in order to achieve this siphoning off of nourishment, first of all, the parasite has to numb the host so it doesn't feel that there's a leech biting into it. And secondly,